Hi there, Harrison.
Hey, Pete, can you hear me okay?
Yep.
All right. Having some issues with my computer, so I'm doing it from my phone, but I'll switch it over as soon as I get it restarted. You guys won't even notice. So,
Okay.
But yeah, let me make you a co-host here.
Okay.
All right. Yep, you're a co-host now.
Hello, I'd like to invite everyone to Friday's call. Beautiful Friday here in Nebraska after we had a wild storm go through yesterday, but we're all in one piece, so thank God for that. Today, NCN invites you and to learn more about the small dollar loan program, and manager Tanya McInnis, and we invited, and she's with the CDFI Fund, and we've invited Russ Seagle with the Sequoyah Fund, who has been a participant of this program for the last year. The program was created to encourage federally certified CDFIs to establish and maintain small dollar loan programs and provide alternatives to high cost dollar loans And the CDFI Fund will be again taking applications later this spring. The CDFI Fund anticipates up to 11.1 million will be available for this program in fiscal year 22. And our speaker today, Tanya McInnis, is the program manager for the Depository Institutions Initiatives Unit. As such, she is responsible for the management of the Bank Enterprise Award and small dollar loan programs. Prior to this, she was the program manager of the Certification, Compliance, Monitoring, and Evaluation Unit and was responsible for management of the CDFI Fund Certification Program, compliance reporting, and monitoring functions. Previously, Ms. McInnis served as the senior advisor to the deputy director at the CDFI Fund, where she advised and supported the director and the deputy director for finance and operations, and planned, directed, and coordinated and evaluated the day-to-day administrative, financial, and operational activities of the organization. So we're excited to have Tanya and Russ today with us. And Tanya, I'm not going to take up any more of your time because I know we have a lot of participants that are excited to learn more about the program as well as I am. So I will, I'm going to let Andy Gordon in here. He just arrived. So here you go.
Great. Thank you, Pete. I appreciate that warm welcome. Thank you all for participating in this webinar. I see my buddy Andy Gordon just joined us. We have some history dating back to 9/11 that we share. So Andy, glad you're a part of this. Just want to warn you all that I'm experiencing some technical difficulties. Specifically, we lost our power about 15 minutes ago, I believe, 15, 20 minutes ago. So I am working from a hotspot, but please just let me know if you have any trouble hearing me. I do have reinforcements in place. My colleague, Julie Sandler, is going to help me present, and she will take over my part should I, for some reason, lose total connection here. And we also have Kim Bowman, who's in the background, but thanks to Kim for helping to coordinate this, our time with you today. Okay, so Julie, can you go ahead and bring up the slides, please?
Everyone see the presentation?
I cannot see it. And so while the slides are coming up, just want to let you all know that Julie and I hosted a pre-application webinar on April 27th. And so a recording of that webinar is posted to our website along with the presentation. So strongly encourage you to go to our website to see the webinar we hosted on the 27th and to see the accompanying presentation as well. I'm just going to give a quick overview of that presentation, that webinar, because we really just want to make sure we have enough time to, talk about the best practices from last year's round and hear from you, just have a discussion with you. Julie, are you able to bring that up?
I was just here. I'm not sure if I need to be made co-host again. That's possibly the issue. Sorry about this, guys.
Shows your co-host.
Okay. Share. Can you see it now? It's showing me up in front of me.
Pete, do you see it by any chance? I'm not seeing anything.
This is screen sharing.
Okay. I'm not seeing anything. I can go ahead and speak to the slides. I think I have a good, I know, you know, I know the slides, so I can go ahead and speak to them as we're waiting to bring them up. So again, my name is Tanya McInnis. I am the program manager for the CDFI Fund's Depository Institutions Initiatives, and we are responsible for administering the small dollar loan program. Really excited about this program. We opened the inaugural round last year. It was well received. We had a little over $13 million available for funding, and we received requests totaling over $26 million in funding. We did make awards. We did announce awards in September, 52 awards totaling a little over $10.8 million. So again, very excited about that program. And those who are hearing about the program for the first time, the small dollar loan program was created as part of the Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010. We received funding for it in 2020 and spent most of 2020 and early last year working on the program designing the application so that we can open the inaugural round. And the purpose of the program is to provide an alternative to small dollar, predatory, high cost, unaffordable loans. And the purpose, there we go, Julie. And the purpose of the program is also to help the unbanked and underbanked gain greater access to mainstream financial institutions. So let's go to slide, go to slide 3, please. Okay, so I'm gonna step back a little bit. So again, I'm the program manager. Julie Sandler is our senior management and program analyst. You'll hear more from Julie in a few minutes. And our other team member is Michael Fulton. He's new to our team. He joined about a month ago. So we're glad to have him with us. Go ahead, Julie, to the next slide, please. And actually, I think we can probably skip this slide. And again, just a reminder that thanks, Kim, that the pre-application webinar, which we held on April 27th, is recorded and is posted to our website along with the presentation. If you want to follow up and review review that later. As I stated a few minutes ago, the program was created in 2010. For this funding round, we have a little over $11 million available. Again, the program was created to help certified CDFIs address the issues of high cost, small dollar loans, as well as helping the unbanked and underbanked gain access to mainstream financial institutions. Next slide, please. So I want to spend a few minutes just talking about program eligibility. So per our statute, the grants can only be used to support small dollar loan programs that offer small dollar loans to consumers that do not exceed $2,500, that must be repaid in installments, that have no prepayment penalties, and the payments must be reported to at least one of the consumer reporting agencies. Next slide. And the awards can be used for loan loss reserves to cover losses on the small dollar loans that you make for a new small dollar loan program or to expand your existing small dollar loan program. And the awards can also be used for technical assistance, for technology, staff support, and other costs with starting a new small dollar loan program or expanding your existing small dollar loan program. Please note that our awards cannot be used to make direct loans to consumers. I'm gonna skip over this slide for now, because we're gonna come back to it, because I do want to spend some time really going into some of the eligible uses that we saw in the applications, as well as those that were successful in receiving awards. So we're going to come back to that slide. It provides some real examples of how the money can be used, the awards can be used. So I want to talk a little bit about applicant eligibility. So per our statute, there are three eligible types of applicants. One is you can apply as a certified CDFI, apply individually as a certified CDFI, or you can apply as a partnership between a certified CDFI and a federally insured depository institution, what we refer to as a FIDI, that has a primary mission to serve targeted investment areas. And then the third eligible applicant type is a partnership between two or more certified CDFIs. Next slide. And the statute further states that for each eligible applicant type, you're eligible for certain types of awards. So if you are a certified CDFI applying individually, you can apply for just the loan loss reserve awards. You can apply for just a TA, technical assistance award, or you can apply for a combination of a loan loss reserve award and a technical assistance award. If you are applying as a partnership between a certified CDFI and a FIDI, then you're only eligible to apply for a loan loss reserve award. If you are applying as a partnership between two or more certified CDFIs, you're only eligible to apply for TA awards. Again, that's per the statute. And let me know if there are any questions about that. For now, we'll go on to the next slide. We'll talk about the prohibited practices. So the prohibited practices, they're listed in our NOFA. And when the round opens, strongly encourage you to please review the NOFA. It provides more detail about the program specifics, including the prohibited practices. And the prohibited practices were developed as a result of requests for information in RFI that we issued the summer of 2020 to hear from the industry on how we should best design the program. And based on that feedback and our own internal research and discussions, we landed on these prohibited practices. So in order to be eligible to receive an award from the small dollar loan program, your small dollar loan program cannot have these characteristics, these lending characteristics or lending practices. And they include high rate loans, coerced automatic loan payments, excessive number of refinancings. There could be no loan add-ons. There could be no security interest, security interest in household goods, vehicles, deposit accounts, etc. There cannot be excessive late fees if there are missed payments. There cannot be abusive overdraft practices. There cannot be aggressive debt collection practices, and there cannot be forced arbitration if for some reason the lender must pursue legal action against that borrower. Again, the NOFA goes into more detail about and provides definitions for each of these practices. In the next slide, we talk about the preferred loan characteristics. So again, the NOFA provides more information about these loan characteristics. And if your small dollar loan program and products include these characteristics, your applications will be reviewed more favorably. So they include, if you offer small dollar loan terms that are at least 90 days, where the ability to repay underwriting considers both the borrower's ability to repay based on their income and expenses. If you are able to make a loan decision within 1 business day after receiving all of your required documents. Additional preferred loan characteristics include if you offer a reduction in the borrower's loan rate, if the borrower elects to use automatic debit payments. Also, if there are automatic savings features built into the regularly scheduled payments, such that those payments are still affordable, but they're going to help that borrower establish a savings account. Again, that's something that will be reviewed favorably. And then the last item is you offer access to a financial education and credit counseling. Next, I want to spend a couple of minutes just talking about the award sizes. So for the TA awards, those amounts range from $10,000 to $150,000. And of course, they're going to be based on what your needs are. So some questions we received last year was that, do you have to apply for $150,000? And no, that's not the case. Again, if your business strategy, your projections, your proposed community impact all point to you needing the $150,000, then by all means request that amount. But again, the range in the awards are from $10,000 to $150,000. If you're requesting a loan loss reserve award, those amounts will be based on your projections. In up to 20% of your 3-year projected to be closed on balance sheet small dollar loans, not to exceed $350,000. And if you are applying for both a TA and a loan loss reserve award, then the maximum amount you can receive or request is $500,000. The award sizes will be based on our due diligence review of your application, to include your projections, to include your business strategy, whether or not your loans include any of the preferred lending practices and loan characteristics that I just spoke about, and a risk rating also resulting from our due diligence review. And for the next slide, I'm going to turn it over to Julie. She's going to walk through the application submission process. And again, we want to do this quickly. We just want to make sure for those who may be hearing this for the first time, understand what the process is. And then we're going to really get into the nuts and bolts of the best practices, what we saw last year when we reviewed our applications, and hope that information will help those who are considering to apply for this year's funding round. Julie?
Great, thanks Tanya, and thanks everyone for dealing with some technical difficulties. Pete, appreciate you sharing your screen. So I'll just talk quickly about this process, and it's pretty standard across CDFI programs. But the application process is a 2-step process that requires the submission of 2 separate documents on 2 different deadlines through 2 different online systems. So the first form is the standard form 424. I'll refer to it as the SF 424. This is submitted through grants.gov, and this form kicks off your application, and you'll indicate your initial amount of what you're looking for, but obviously it can change. You decide, maybe I only need 200,000 of LLR. When it comes time for your AMIS application, that's fine. We'll go with what your AMIS application says. Then the bulk of the application is the program application. This is submitted through AMIS, and most of you should have an AMIS account at this point. And this is where you answer the bulk of the questions. Next slide. So to get started, we haven't announced the round yet. It's coming soon, but what can you do? So the important thing, if you're interested in this program, is obtain your EIN and your unique entity identifier, your UEI number. That term UEI may be a little different for some of you. The UEI replaces your DUNS number. And so for the federal government has stopped using DUNS to uniquely identify entities. The CDFI Fund automatically populated AMIS accounts with the UEI if there was an active AMIS account in March 2020 when the transition began. However, as part of the application process, you should still confirm that your UEI is aligned in the 3 systems that you'll be working through today, which is working through for the application process, which is SAM.gov, grants.gov, and AMIS. And recommend as you get started, you can still refer to prior materials from 2021, just to give you a sense. Next slide. So these are the deadlines. So we will announce the notice of funding availability, the NOFA, and then 30 days after that announcement is when the SF424 is due. Also on that date, 30 days after, is when you will be required to enter your EIN and UEI into AMIS. So you're just going to want to have those set between all systems. And then 60 days after the NOFA publication is the final due date for your SDL program application. Great. Next slide. So here is a little resource of, I have a question about certification. Where can I go? Certification team. I have a question about the SDL program, the application questions. We recommend you submit an AMIS request. We also have phone number as well as an email address if you need to do that. And as a quick reminder, the CDFI Fund does not maintain grants.gov or SAM.gov. So you should reach out to this contact information there. And before we open up for questions, could you go back to slide 8? We wanted to give a little bit of color of small dollar loan program. Purpose of the program is let's increase payday alternative lending. Let's increase small dollar consumer lending to people that need it. And CDFIs are a great way to do it. But what does that look like in the type? We offer a TA award and LLR award. So what does that look like? Let's give a little color. And I know we have Sequoyah Fund here who can also answer some questions about what they'll be using it for. So one applicant used their LLR award to attract more capital because their investors, they felt that small dollar loans are really, really risky. And so their investors actually put a requirement for them is they need a reserve of 15%. And so they have their own, so they were able to buffer up their loan loss reserve based on what they plan of 15%. And what they plan in terms of number and volume of loans. And so they were able to use that to kind of reinforce the riskiness of the small dollar lending from there. At the bottom, the last bullet as well, one applicant was expanding, maybe their minimum credit score was XYZ. They decided to lower that in order to increase their penetration into their target market and really meet people in need, or maybe who didn't even have a credit score. And with that, there's more inherent risk with it. So they wanted to increase their loan loss reserve fund. A couple of applicants worked with a technical services company, FinTech. So one used it for developing an app to so someone could fill out their application and process it quickly. So we'd be doing back-end work and front-end work. And so they were able to use your technical assistance award for that. Another big component of this program is financial education. So a lot of CDFIs view financial education going hand in hand with small dollar lending. So they used a software to help deliver some of that financial education. Lots of different things. We have some examples in the FAQs, but if you have questions, does this make sense? Definitely, there's some slight differences in the TA types that are eligible for SDL program versus the CDFI program TA. We don't allow fringe benefits, but there is a lot of flexibility within it. You could also use it to report to credit bureaus. Maybe you're offering small dollar lending, but you're not paying that subscription cost to report to the credit bureaus, which means you're not eligible per the statute, but you want to do that because that helps low income individuals. And so that is definitely a great use of a development, a TA award, development service. So I don't know, Tanya, did you have anything else to add?
No, thank you, Julie. That was very helpful. So yeah, we added this slide in the presentation because again, we want to make this real for those that are considering a small dollar loan program award, and they may not know quite how they would benefit from having such an award. I mean, as stated previously, our awards cannot be used to make loans directly to consumers. But here are a few examples of how the awards can be used. The NOFA provides some additional examples, and perhaps it would be a good time for Russ to chime in on how Sequoyah Fund is using its award for its small dollar loan program.
Yeah, thank you, Tanya. I will say first, we are adhering to the rules. That is the main thing. This program dovetailed nicely with our Credit Builder Loan Program, which is our smallest loan product, but it has one of the largest impacts in our community. And if you've written grants for any length of time, you know that most grant funders like to fund the work, but they don't like to fund the stuff that supports the work, all of the people and those expenses. And this is a program that does exactly that. That was one of the things that made it most attractive to us. As Tanya mentioned, we do offer some of those optional things like ACH payments monthly, so they don't have to bring us a check. We offer those, but our must-haves are really on the front end. We tie everything to the financial literacy education. We have a certified credit counselor on staff, and so she teaches a course, and we don't give people an application. We're very quick. We are within that 24-hour window in terms of approving the loan, but they do not get the application immediately. They do have to submit to some credit education, but people have found that very beneficial because a couple of weeks into that, they have a better idea of how to triage their expenses, how to triage those credit card accounts and the different bills that they have. And then they can sit down with our counselor and talk about what needs to be tackled first. So we do loans of up to $2,500. We do these at 4% for up to 24 months. Now, a lot of these get paid off much quicker, but we give people up to 24 months because in case something happens, we want to be able to give them a little forbearance, a little grace, and we don't want to have to be rewriting loan documents every time we do that. And we know that life happens to some folks and sometimes. So there's no origination fee on these. And again, we have them meet with our counselor. We have them take this course. COVID forced us to move our course online. So we've been taking everything that we did in a live course, and we've created a very comprehensive course on the Thinkific learning management platform, which people tend to like. And this program helped with that. I can also say that if you are not currently reporting to the credit bureaus, we report through Credit Builder Alliance, or CBA. They report to all 3 credit bureaus, and that is an expensive and time-consuming process. Not on the CBA side, but on the 3 major credit bureaus side. They do a lot of vetting. There's just a lot of paperwork, and if you can use a program like this to help pay for some of those expenses to get you to a point where you can do that, it's very beneficial. We do report to all 3 bureaus. We did not apply for the LLR award. We applied only for the TA, and we were awarded $135,000. And we can very clearly divide that up among our credit support people, our lender support folks, and we know exactly where that money's going. We did not apply for the LLR because the Eastern Band of Cherokee, all enrolled members receive a semi-annual per capita payout from casino profits. So our credit risk on this is virtually zero. We didn't need an LLR. What we needed was fuel to put the program in action. So when they sit down with our counselor and they have this list of things that need to be paid, we actually pay those bills for them. They don't get a check for $2,500. We pay those bills for them in a predetermined increment so that they get the double whammy of having those bills paid on time, over time. Plus, when they pay us, we report the positive action on their credit as well. So it's a double whammy in a good way. Now, if the wheels come off and someone says, okay, I've just borrowed $2,500, I can't pay this back, we can actually restructure their loan to be paid from their per capita, and we can report that as a positive pay on their credit. Sort of the Hippocratic Oath. First, do no harm. We want to make sure that everything we do is geared toward helping them. And we don't put a limit on how many times people can participate in the program. If they work the program, they follow the rules, and they pay this loan off, they don't have to go back through the counseling and the course, but they can borrow the money again as many times as needed to get them where they need to be. Under this program, we've done about 12 loans, and we've seen average credit scores go up by about 40 points. I would love to say that we would see higher credit scores over time, but again, people don't always stop their spending. They don't always stop using those credit cards. We don't make them cut the credit cards up. We don't make them freeze them in a bowl of water in their freezer. We don't make them get rid of those. Actually, some people have credit cards that are very old, and it's good for them from a credit profile perspective to hang on to those cards. But we do help them form better habits about how they use those cards and how they use those credit mechanisms. For our auto lending program, we found that some people are not ready for a car loan yet, but what they need is a credit builder loan. And this program helps us get them in increments to where they need to be. Better money managers, better credit users, and just better overall understanding of how money works. So when they finish with us, they have a better understanding of where their money goes. They set goals, and they can see how their spending habits affect those goals, and how sometimes their spending habits prevent them from reaching those goals. But we primarily spent this money on our staff and our technology needs. Without this, we could do this, but it would take a lot longer. So this was really just rocket fuel for a credit builder loan program. And it's one of those things that has borne out tremendous results in a very short amount of time. I would just encourage you to get the ball rolling. I'm not getting a commission on this. I'm just saying this is a great little program for CDFIs to take advantage of. And we will be applying for it again in the future, but we've got a clear window of how long this money is going to carry us forward. And so we're always thinking about the next steps.
Thank you, Russ. I really appreciate that. I didn't know what you were going to say. And you hit on all of the key points Julie and I wanted to stress during this presentation about this program and the importance of it. We understand the importance of it, and we designed it in a way where we felt it would add the most value to organizations such as yours, Russ, who have the need in your communities, who are want to do the right, the prudent thing in their communities to offset the predatory lenders that are on, preying on folks who need money, and they need money quickly. So your application, for example, was one where it was clearly understood the need, and your plan for addressing that need, and your projections, reasonable projections on the number of small dollar loans you are going to make. Again, a great success story. I encourage others, please to reach out to Russ directly. If you need any guidance on what they did to submit their application, or you can reach out to Julie and me as well. We'd be happy to answer any of your questions as well. So a great example, a great success example of how the awards can be used.
I've got the old saying, there's never a dumb question. This might be a dumb question here. How do you, it says that you cannot make the loan directly to the consumer. So let's say if you have someone come in for a $2,500 loan, is that loan used to pay off bills? Or can you explain a little bit how that loan, how the program itself doesn't allow you to make a loan directly to the consumer? And what are the purposes of it then?
Russ, did you want to go?
Yeah, if you don't mind, Tanya. So we, again, with the credit builder piece of the loan there, we fund those. We've got money in our reserve accounts that we can use for those. And again, we're talking about small dollar loans. So yeah, it was kind of a rub that we weren't able to use that money directly for the loans. But when we looked at the pot of money that we were going to use for this, we realized that we also needed to do things, Pete, like tighten up our credit application. If we're going to make a quick credit decision on a small amount of money, an 8-page credit application, which is what we traditionally had, was not going to work. So we spent some time to get that down to a 1-page application, very quick turnaround. And so we knew that we had some money sitting over here in this other bucket that we could use. And we very quickly realized that we had a lot of things surrounding our loan program that we could spend the money on without putting that money out the door in the consumer's hands. Now, we also do, we don't tie that necessarily directly to paying off credit card bills, although that's the number one thing people want to do with it. But if somebody came in with an emergency, like their heating and air conditioning went out, they've had a car breakdown on them, something's happened, they need quick cash at something less than 27% interest, we can turn that around very quickly under this program.
Exactly. So again, I'm going to refer to the statute. Per the legislation, our awards cannot be used to make loans directly to consumers. Our awards will support the CDFIs existing small dollar loan program if they want to start a small dollar loan program by providing loan loss reserves for the loans that you make, should there be any losses. Or our awards can be used for technical assistance to help you grow your program or start a new small dollar loan program. And as Russ provided a few examples of how the CDFI can, the types of loans that they can make. So it could be for an emergency car repair. It can be for emergency medical expense. It could be to pay for a credit card that's coming due. It could be used to, and we saw this in several applications last year, where the borrower needed to pay off a predatory loan. So they, went to their CDFI seeking a more affordable loan to do so. So there's a variety of reasons why a CDFI will need or make small dollar loans.
And do does the annual reporting, does it go through the AMIS, the ILR, and the TLR just as any other award would?
Yeah, there is reporting required for this program, but our program does not require recipients to submit a TLR or an ILR. So again, for the small dollar loan program, you're not required to submit a TLR or an ILR. I strongly encourage you, if you have multiple awards from the CDFI Fund, to carefully review your agreements, your award agreements, assistance agreements, to understand what your reporting obligations are. So, although our program does not require the submission of a TLR or an ILR, you will be required to submit a PPR, a performance progress report, known as the PPR, and a uses of award report. You'll need to report on the number of loans that you make during each period of performance. And you also need to report on your loan loss reserve account, how it was used, if it was used during a performance period. So again, the agreement will specifically spell out what the reporting obligations are.
And one more question for you. Will any delinquencies or write-offs, will that count against your certification on the, I believe it's 15%. Will you have to count that towards that?
Pete, can you go? I'm not quite sure I understood the question.
On your delinquency ratios, I believe, any delinquencies that you have with this particular program, when you go to reporting, will you have to count these delinquencies in your reporting and on your annual report that you submit on the performance goals and measures?
So one of the reporting requirements will be that you submit the uses of award report, and that's where you will report on your if you receive a loan loss reserve award, how that award, if you had any losses, and what those losses were, and how did they impact your award. So let's use some numbers here. So let's say that you receive a loan loss reserve award for, let's just say $200,000. And let's just say you had losses totaling $10,000 or so during a period of performance. So in that report is where you will document, and I'm not quite sure, another business unit manages the post-award reporting responsibilities, but you'll report out on the $10,000 of the losses that you used from our award to cover that. So I'm not quite sure if I'm answering your question, but it's more like you'll be reporting on the accounting of those losses with respect to the award that you received from us. I don't know, Julie, did you want to add anything to that?
No, I think, yeah, first of all, the reporting, this is our second year of doing it. So that's a part of it. But we understand, like, coming up with the loan loss reserve, it's a portion of your write-offs, it's a portion of your delinquencies, but maybe you're not writing off your entire loan loss portion, but you need to take a certain reserve. So I think that's kind of like when you're setting what's the appropriate request for loan loss reserve and what's the appropriate reserve, kind of like keep that in mind, and then you'll be reporting out on that.
Did we answer your question, Pete?
Yeah. I just wanted to make sure that these funds weren't exempt from reporting.
Gotcha. Yeah. Okay.
Do we have any questions from anyone on the call here? Hey Russ, I have a question for you. Like of the what are some of your best success stories from this program?
So, yeah, well, we actually had a lady, and some of you know our associate director, who was also our counselor, Hope Husky. We had a lady who poked her head in my office one day, and she said, I need you to know I hate Hope Husky. And, and I said, okay, why? Well, she made me quit smoking. I said, I don't think anybody can make you quit smoking. She said, well, she made me quit smoking, and now she's making me take all of my cigarette money and put it in the bank. And so we were able to help her pay off some high interest debt. And I'm telling you, the debt that we're seeing is, I mean, it's not 12, 14%. It's 25, 27% and more. And that's oppressive. So we're not only helping people pay off that debt, but again, we're teaching them what they can do with the money they save. We did have one participant in the program. She worked the program faithfully until she got her money, and then she disappeared and never paid that back. But again, our credit risk on this is virtually zero. We do have them sign a per capita assignment form at closing. It just says, if you ghost us and you never see us again and never pay us, we'll get the money, and we'll report that as a positive on your credit, even though you've done us wrong. Again, we're not going to see huge earth-changing stories like you might think about with a big commercial loan or something like that. But in these people's world, that $2,500 is a big step towards something better. And that $2,500 is maybe the first step to another $2,500 and another $2,500, so that they can chip away at some of this larger debt a little bit at a time, taking it down from, 27% to 4%. And this is like one of those, I think the old Clairol, was it Clairol commercials? She'll tell her friends and her friends will tell her friends. And that's kind of the way this grows, is that when people say, wow, where do you get all that extra money? Well, I'm not making extra money, I'm saving a lot of money, and here's why. And they send them to Sequoyah Fund.
Yeah, those are great examples, and that's it's all pointing to the reason behind the creation of the small dollar loan program, is to help those who may not have a credit history or have a poor credit history build a credit history or improve upon their credit history, so that they can take these steps and to become more entrenched into the financial mainstream. So it starts with a small dollar loan, then it moves to a car loan, then it moves to perhaps an affordable home mortgage. So it's these steps, that the small dollar loan is helping individuals improve upon their financial condition and give them greater opportunities.
And I do love the way the program's designed for a quick turnaround time, because I think that's the key to the predatory lending, is that 24-hour and sometimes instantly approval. And people, when they've got a crisis on their hand, the thing that I find is that time is of the essence, because if we don't give it to them in a relatively short period of time, they're going to find somebody who will, and not necessarily at the low interest rate. So that, I think that is wonderful.
That is so true. And one of the, while we were designing the program last year, one of the things that we were focused on the most was that we wanted to make sure the application was a streamlined one. One is that, granted, that the dollar amounts are not large, but we understand that there's a great need for small dollar loans. So we want to make sure our process was such that a lender such as Russ would not have to jump through hoops to complete our application, and then for Julie and me and others to review the applications. So we've gotten positive feedback about the application process. about our, making award decisions, in a timely manner. And late last year, we did publish the application in the Federal Register for public comment, and the comments we received were very positive, great comments from organizations, from the industry, that they really appreciated our efforts to make a streamlined application, and had suggestions to further streamline the application, which we took to heart, and Julie and I made some additional enhancements to the application for this funding round, which we anticipate the round will be opening soon. And hopefully those who elect to apply will see that the application is one that's not difficult to complete. But we always welcome your feedback. There's always room for further enhancements and improvement.
And I think looking through the awards, it looked like there were 3 Native groups that received it last year.
That sounds about right. Yes, that sounds about right. So again, it's, those that were successful, and not specific to Native organizations, but in general, those that were successful, had a strong business strategy, that they articulated the need in their communities for safe, affordable, small dollar loans. They demonstrated, articulated through their applications how their programs would have a positive, impact. Their application strongly talked about their projections. So those were some of the things we saw in the applications that resulted in us making decisions to award those applications. Julie, do you want to highlight some additional things you saw?
Yeah, and I mean, we have an entire question in the prior application that was on partnerships, and especially with the Native CDFIs, it's what are their partnerships within their target market? So how are they getting referrals to build their pipeline? What is the relationship with the tribal government? A lot of would highlight that, how they're partnering specifically within their target market. And so for Native CDFIs, there's very specific partners that they would highlight. Some were expanding, maybe they were expanding their reach a little bit. So how are they reaching outside as well? So, because we're not, the small dollar loan program isn't as constrained as, oh, it needs to be like this percentage here. We really try to offer a lot of flexibility. Like Russ said, like we want to like give the capital to help you build it and attract it. So I would say, yeah, just the partnership aspect, especially for the Native CDFIs, was important.
Well, I appreciate your time, and we will post this on our website, and then we'll do a follow-up as well. We usually do a narrative about it. And if anyone has any questions, please don't hesitate to reach out to me. And is it okay if I put your contact information out there?
Please do. Yes.
Okay. And I'll put the contact information out there, and hopefully we can have double the amount of Native CDFIs that we receive it this year. I know we're going to seriously look at it, Native 360. So this is, I see a need for it on a daily basis. I truly do, especially with credit increasing, inflation increasing, just everything that we've gone through. I really see a need for this tremendously in our community.
That's great to hear. And we really appreciate this opportunity to present to this group. Russ, thank you so much for your comments regarding the program, how you all are using the award. I strongly encourage others to please be on the lookout for the NOFA, which will formally announce the funding round for this year. Anytime, please reach out to Julie or me. We'll be happy to answer any questions you may have. Also strongly encourage you to go to our website where we have more information about the program. Again, the webinar we hosted on April 27th is posted there, along with the presentation, which is the presentation that we just presented to you today. So thanks again. We appreciate this opportunity to present to you.
Thank you. And I thank you, Russ. I appreciate it. We've had you on a couple times now, and you always bring joy and laughter to the group. So you're very positive, and you're a great person to have around and inspire the rest of us. So thank you.
Thank you, Pete.
You bet. All right. Thank you.
Thank
Have a
you.
great weekend.
You too. Thanks. Bye-bye.
Bye-bye.